Hi guys, welcome to GraceTalksWeb3. I put the headline as the Bitcoin stressed Senator Warren challenges Trump, as well as this week's major US economic reports. And also at the end of this live is gonna be the paper digestion of A16Z response to Genius. What is the perspective of the VC apart from the political aspect? So today's stream it covers a packed agenda designed to keep you informed, prepared, and ahead of the market. For the first section, that will be the biggest crypto news of today. The first one, we will begin with the Asia Morning Brief BTC market stress reviews in your crypto order. And the second one, we move to Bitcoin positioning reverse completely from $140,000 calls to $85,000 puts. And the third one, we move to touch a little bit of political aspect as Senator Warren challenged Trump's crypto ties as market structure bill is negotiated. And the next one, we move to see the calendar this week's major US economic reports and Fed speakers. And after this, we will see a little bit of predictive article. What will happen if the Fed cuts rates before Christmas Eve? And in the second section of this live streaming, we will move to see the market check-in, starting from CryptoBubbles, CoinMarketCap, Fear and Great Index, BTC Dominance, still Altcoin Season Index, top trending tokens, as well as BTC Spot, ETF net inflows. Is there any tracking institutional left at the moment as in the appetite, or is there any company sell the shares? And the last one of the this section, there will be the token unlock, checking a little bit for the upcoming vesting events that may move markets. And the last one, we will move to see the A16Z respond to Genius. What does it mean and why everyone is talking about it? And if we have enough time still, we will take a look at the regulation a little bit on the why regulators urgently need to catch up to the new privacy paradigm. And the last one, talking a little bit more on the AI aspect. Is it true that AI is a bubble? Some of the comments that I have seen in the article, they say it's not a bubble because AI is already running the markets. Okay, this is a bold statement. And if we have enough time, we will take a look at this as well. But I will pick the A16Z response in the first priority. Uh, Welcome you guys to the Bitcoin stress senator Wallen challenge, and the US economic reports at the moment is the streams that cover all over the macroeconomic, the political idea aspects, as well as to prepare you guys the to stay ahead of the market. If you come in, don't forget to subscribe, click like, and comment to see what will be your ideas or area that you prefer to study in crypto and Web3. Just drop me the outline, and then I will read and probably digest and share you guys in the next slides as well. Moving on to the Bitcoin price right now, I see the 91,000. Let's put the time frame for a day. $91,000 at the moment. And for the crypto bubble, I have seen the greener area, mostly 70% of the chart. I see right now we have Stark jumped to Stark's price right now is at 0.22360 and plus 25%. As well as MYX right now the price is at $3.107 and the price is jumping to 24.7%. And what is the big circle? Right now that I can see the big percent apart from this is gonna be AB 13%. The token price right now is at $0.007609, and IP is good to $1.09, jumping 10.3%. FET, the price right now is at $0.2980 and jumping above at the 81st ranking plus 8.1%. CRO we have right now at $0.1125 and the price is up 7.2%. For the week, for weekly time frame, I still see TEL that performs very well. The token price right now is at $0.006514 and it jumps 1.9%. And for the weekly time frame, stock performs very well as well. It jumps 45.4%, and the price still 0.2353. And Aster still growing very strong. The price right now is at 1.3333, nice number dollar, and the percent that they grow it's plus 15% in 1 week. As well as CEZ, the Bitcoin privacy token, I see the price rise today plus $100. Yesterday I saw it was still at $500. So today it's jumped to $621, and the price so far in the weekly time frame it jumps to 30.5%. These are the token that's still growing strong in the weekly time frame. And I see Dash is the $76 roughly and growing 8.1% this week. And today it's better than yesterday. Actually, most of the altcoins are becoming to live a little bit. Mostly and the The one that's still sinking right now, I see ADNA. Token price is at $3.181, drawing down to 23%. As well as ICP today is not performing, it's coming to lower than yesterday, 9.3%. The token price is dropped to $5 roughly, and XMR drops 8.2%, and the token price right now is at $376. Moving back to see the CMC index, market cap today, it's slightly increased to $3.13 trillion plus 0.08%, and year and grade index, it's rise plus 1 to 16, and the Bitcoin price today it's at 91,000 dollars. Ethereum it's at $3,098. BNB it's $923. Solana it's at $139, as well as the last one XRP still slightly lower than yesterday, $2.1456, and it drops to 1.81%. And the altcoin season index still are at 31 out of 100. It's still in the Bitcoin season. Altcoin is not even reached at the middle yet. And as of yesterday, November 18, crypto ETFs net flow, most of the institution they rebalance the portfolio as well as may cash out. So the net flow minus $447,000, and the market is still bleeding today. Moving on to the crypto spot volume as of 24-hour, we are moving lower to 287 billion roughly, the spot volume trade in the crypto market. And moving to see Bitcoin dominance in percent number, we still have 58.2% on the Bitcoin and 11.9% on Ethereum, as well as the other altcoins or other token. People still trade at the 29.8% portion. And moving to see the RSI heat map, or the average crypto RSI, it's still at the oversold level 44.06, and comparing overbought vs oversold, overbought is at 0.3% and oversold is at 2.8%. And zoom in, if we zoom in to see the crypto RSI heat map, the green area is the oversold. I see BTC, XRP, TRX, ADA, AVAX, BGB, VET, Jupiter, Tier/Tier 2Z, A Fluid Core, Bera, LG, CT, Vmix, Mocha, uh, what else? Real, REQENJ, SHX, AIC, and the medium range of the overbought, between overbought and oversold, we have ETH, BNB, Solana, Doge, Hype, ZEZ, CRORV, WLD. I think it's whoa, okay, yes, correct. Dash Bonk, Syrup Sand, Rowan Prom Linear, Lista, UAI, EDU, Ore, Xpin, and the overbought area. I see Acer is still performing very well. I see the momentum of the graph during these 1 to 2 months. It's still performing very, very well, even though it's coming to the lower low and it's gonna boost the price up. Stark MYX Wolf5. This is the token that I have seen right here in the crypto RSI roadmap. Let's take a little bit of the look what is the top trending token right now. We have Altcoin instead of BTC. Most of the top trending from the first until the 10 ranking, it's all Altcoin. Wow, this is very surprising because okay, I see right here first one I have XAN from Anoma, and then Caldera ERA, and then Dgram from Datagram Network, and then AIO Ola XBT, and then A Pro NXPC as in Next Space, MYX Finance as in MYX, Agent AI as in AIA, Avalon Labs still in the ranking as the top 10 trading token, AVL, and the last one it's Trump, official Trump still still conquering the top 10 trending token on CoinMarketCap. Before we move next to the news of the Asia Morning Brief, let me share the campaign from our bank exchange. Copy link. Okay. How are you guys doing? I'm going to drop it again and again in the link right here. And wait for me to translate from Indonesian into English. So you guys will be able to digest the content with me. And yes, this is the content of this is the campaign, not the content. The campaign, trading campaign that our bank launched last week, and this specific campaign is tailored for the KOC specifically, as well as the community under their management. But I haven't set up and construct or started my community yet. Anyone that is interested, feel free to join the campaign. The idea is very easy. So the campaign is just 20% deposit bonus and then extra reward on top of it. The idea to do it is to transfer the amount to the futures account, and then you will be able to gain up to 200 USDT bonus. And then after that, you need to trade to earn more, up to 200 USDT as the extra reward. The campaign, I think it's left around 2 to 3 weeks, because there will be 1 month duration and they started last week. So we have 3 weeks left. It's gonna end in 13 December at 2 p.m. UTC plus 8. And do not forget to register, because only eligible user and registrants that can participate in this campaign. So the reward, it will be distributed every Monday, every Wednesday, as well as every Friday. Let me drop you guys again in the live streaming chat. Okay, I dropped the details on the chat box already. So just in case if you guys pass by later. Mm. Let's move next to see what is the biggest crypto news of the day. I have right here, it's the Asia Morning Brief. BTC Market Stress review a new crypto order. So let's see what is going to happen. So this new, I have got it from CoinDesk, and uh it is written by Sam Reno. I'm curious who is he. Senior reporter in Asia. Sam was part of the CoinDesk team that won the 2023 Gerald Loeb Award in the breaking news category for coverage of FTX collapse. Prior to CoinDesk, he was a reporter that with Blockworks and a semiconductor analyst with IDC. Oh wow, good one. Okay, so I will pick this new based on his writing, and thank you for the nice article, Sam. You are doing really great. Let's begin. Uh, He writes right here that market observers note stable XRP BTC token pair and ETH BTC token pair ranges and an unusually balanced top 20 ranking, signaling fundamentals driven dispersions rather than a broad out season. This article came out in this morning at 9, almost 10 a.m. So the key bullets that we need to know is Bitcoin's recent slide under $90,000. It did not trigger the usual deep correction behavior. It indicates a shift from a liquidity driven to a fundamentals driven market. And apart from that, tokens with clear utility, staking, or institutional demands are maintaining their value while speculative assets face pressure. It is what it is. The third bullet is the Asia Pacific markets showed mixed results with Japan's Nikkei 225 rising 0.5% despite Wall Street's tech-led declines. Okay, this is very interesting because I scrolled the Twitter this morning. I see some of the reporters. They shared the views on the reasons why Japan's Nikkei performs very well today, apart from Nasdaq and Wall Street. So this can be the area to talk next for the live that I think I can show. I can pick and show you guys. Let me take some notes from my phone, if I may. Give me 1 second. But I'm curious why it's rising. I think there must be some uh, in fundamental structure, infrastructure. I'll find out this area and share with you guys in the next streaming. Okay, and good morning, Asia. Actually, right now it's pretty. It's in the evening. Okay, here what's making news in the market this morning. I quote from his writing. Welcome to Asia Morning Briefing, a daily summary of top stories during U.S. hours and overview of the market moves and analysis for a detailed overview of U.S. market. See CoinDesk, Crypto, Daybook America. Okay, so Bitcoin's like under $90,000 looked like the start of a broad list of move, yet the market did not behave like it usually does in a deep BTC correction. Cross-paired, stay firm, and outranking Barry Bust. I think it's the region, it's the zone where people who bought BTC early in 2025 will be slightly lost. But people who started to accumulate Bitcoin before that, I think they're still being bearable. It's not in the bad situation that much. Question mark. Okay, in a note to CoinDesk and Flux, a Singapore-based market maker said the lack of price action that typically occur during a deep BTC correction is the clearest sign that crypto is shifting from a liquidity driven market to a fundamental driven one. This is very good to know. And can we have a look? How does influx look? Mhm. Okay, I'm just curious. Moving on. Um, since we know that the market has adjusted from liquidity driven to fundamental driven, next the majors without clear revenue utility or institutional relevance are down 60 to 80%. The firm wrote traditional out season, the 2017 style vertical rotations, or the 2021 reflect steep leverage cycle depended on narratives, access, liquidity, and retail mania. Most of this doesn't exist on scale in this bull market. So Influx also noted that tokens tied to staking ETFs or real world usage are holding up. Byzantine Capital Smart saying Sheng or Seng if I pronounce it wrong, I'm sorry, CHEN, Seng or Sheng, said he's saying the same dynamic. So let me search how does it look. Byzantine Capital. Cannot reach. So he see this dynamic. We are watching instead the relative ranking positions of the top 20 coins and how they are moving in relation to Bitcoin's market cap. He said so far the range has been quite balanced as generally heavy Bitcoin corrections see significant price degrades in the alts. Shane, Shane believes that stability suggests the market is not entering a classic alt season as is instead showing signs of a more orderly structure. The the thing is, I think it's good to readjust the fundamental of the market as well, since we have a lot of non-utility token or non-utility project. There's no use case. If we are looking for the good adoptions instead of price projection, the signals point to a market that is gradually separating durable assets from speculative beta tokens with identifiable users, revenue, or institutionals. Demand continue to hold their ground, while weaker majors absorb most of the stress. So he says the question is, will this thesis of fundamentals over broad speculative rotations hold? And the market movement right here, they summarize the Bitcoin, Ethereum, Gold, Nikkei 2025. And for the Bitcoin, it's trading around 92,000 roughly after recovering from its slight below 90,000 this week, and ETH or Ethereum, Ether is holding near around $3,000 as it stabilized alongside the broader market. And for the gold is surprisingly to me performs very well if you guys accumulate the gold. Since the beginning of this year, you still doing like your portfolio is still doing very well comparing to the one who still accumulate Bitcoin. But who knows, we cannot define any asset within this small time frame, right? So the gold fell for a fourth straight day to $4,000 per ounce, staying below last month's record as traders cut the odds of a December US rate cut to about 50% from nearly 94% a month ago. And Nikkei 2025 that I am curious. Asia Pacific markets traded mixed Wednesday, tracking Wall Street tech-led declines on AI valuation worries through Japan's Nikkei 2025. Oh no, 225 reversed higher by 2.5%. So far, I think the market is slightly better from yesterday. Uh, let's see. Since we are here, is there any roadmap coming this week? For this week, major U.S. economic reports and Fed speaker. We are right now on Wednesday. There's nothing important. Maybe tomorrow we have non-farm. Or on Thursday, we have import price index and the import price index minus fuel and industrial production and the capacity utilization, as well as factory orders and home builder confidence index. Federal Reserve Governor Michael Barr speaks at 10:30 a.m. UTC, and Richmond Fed President Tom Barkin speak after that at 11 a.m. So far, let's take a look whether is there any firm sell the BTC. We are right now on 19, right? But the US hasn't opened and wake up yet. So we have right here sell 0.568k BTC. In USD, it's 523 million roughly. I bid. What is the company? Oh, BlackRock, yes. BlackRock sell the BTC. And the one who buy is ECBC. Franklin Bitcoin ETF. Oh, how much that they buy? 10 mil. Total it's 100, almost 120 BTC. Okay, and it's good. Daily trading volume of Bitcoin spot ETF today is the 6 billion, roughly $6 billion, and total net asset we have right here today at 131st billion dollar, roughly. Okay, it's good, not bad. Oh, okay. I talk a lot, but forgot to open the mic. Okay, right. Give me 1 second. Okay. Hi guys, welcome back. So moving next to the second news, we are digesting the Omar Godbole news. It's the Bitcoin from 140K goes to 85K. So this these positions reserves completely. So far, the price of Bitcoin it has dropped it over 25% to 91,000 dollars since October the 8th, right? And this is the key takeaway that we need to know. So Bitcoin options have shifted from bullish to bearish with puts new leading to open interest, and traders are increasingly buying put options for downside protection with significant activity around the 85,000 strike. Also, the price of Bitcoin has dropped over 25% to $91,000 since October the 8th. And so the Bitcoin options have flipped the script with a 180-degree shift from last year's over bullish bets to a sharply bearish stance. So since late last year, traders were very aggressive. They chased bullish moves by pulling into call options at strikes of $100,000 to $120,000 as well as $140,000 on deribit. And up until the recent weeks, the $140,000 call was the most popular on deribit, with the national open interest or the dollar value of the active contracts consistently above $2 billion. And now that's changed. The 140,000 dollar calls open interest stands at uh, one $1.6 billion roughly. Meanwhile, the $85,000 put has taken the lead with $2 billion roughly in the open interest. Puts at 80,000 dollars and $90,000. The strikes also new eclipse the $140,000 call. So clearly the sentiment has shifted decisively bearish, and not surprisingly so, as BTC price has collapsed over 25% to $90,000 since October the 8th. So this is the data from the CoinDesk. But put options give the purchaser the right, but not the obligation to sell the underlying asset at a predetermined price at a later date. So a put buyer is implicitly bearish on the market, looking to profit from a hedge against expected price slide in the underlying asset. A call buyer is bullish. Okay, so this is the area that we are talking about. And the chart shows the distribution of open interest in BTC options and various strike price level across expiries. Clearly, open interest is getting stacked at lower strike puts, the so-called out of the money put options. So while the number of the active call is still notably higher than puts. The latter are trading at a significant premium or skew, reflecting downside fears. So option reflect caution heading into year end. Short dated puts with strike at 84K to 80K dollar have seen the largest trading volumes today. Front end implied volatility sits around 50%, and the curve shows a heavy put skew around plus 5% until 6.5% for downside protection. And this is the comment from the derivative chief commercial officer Sean David Perquino said in the email. Let's take a look of how does he look like. Mhm. Oh, he's in Hong Kong. He can speak English, French, German, Italian. Oh my god, this is awesome. So, okay. Options activity on decentralized exchange Dirac.xyz paints a similar bearish picture with the 30-day skew falling to minus 5.3% from minus 2.9%. So this is a sign of traders increasingly paying up for the downside insurance or put options. And this is the comment from Dr. Sean Dawson, head of research at leading on-chain options platform Derive.xyz. He told Coindesk that looking ahead to year end, there's now a sizable concentration of BTC puts building around the December 26 expiry, particularly at the 80K strike. Okay, it's lower and lower. I remember yesterday we were reading the news and people were expecting at 90, and then today we have some information, the new information expecting 80K strike. And he explained more with ongoing concern about the resilience of US job market. Okay, and the probability of a December rate cut slipping to very above a coin toss. There's a very little in the macro backdrop, giving traders a reason to stay bullish into the close of the year. Doesn't explain. So this is the major important thing. What's next? While the path of least resistance appears to be on the downside, the selling may soon run out of steam as technical indicators point to oversold conditions and sentiment is at bearish extreme. So, Pekinyo, he mentioned that with a fear and great index around 15, and an RSI nearing 30, oversold but not yet extreme. Whale wallets is below 1000 BTC that he mentioned. Uh, the whale wallets have increased notably in the past week, hinting a smart money accumulation at undervalued level. So maybe it's good to track the whale wallet. Let me take some note. Overall, downside fears are justified in the short term, and the path of least resistance remains slower for now. But extreme setups like this have rewarded the bull in crypto passes. He added. Let me read it again. Overall downside fears are justified in the short term, and the path of the least resistance remain lower for now. But extreme setup like this have rewarded the bull in crypto pass, he add. So I will just copy and paste this guy and publish the content in TikTok. CoinDesk news we are right now. What is the new again? Bitcoin position. Okay. I just like him so much. The way he says is really inspiring. I just touched a little bit of the capital movement. This is the news that I have got from CoinDesk as well. So this is all about the policy, and this news has been written by Jess Hamilton. The news has come out today as well, early this morning, and they put a headline at Senator Warren keeps pressure on Trump. Crypto ties as market structure being negotiated. She's maintaining political heat on President Trump's world liberty financial business interests in a letter to the Treasury and DOJ. Okay, at the second section of the live, we will dive deeper as well for the Genius Act, but from the perspective of A16Z. But let's take a look of the news. This new there are two bullet points that we need to know. So Democratic senators Elizabeth Warren and Jack Reed have asked the Secretary of the Treasury and the Attorney General about potential issues with President Donald Trump's relationship with World Liberty Finance, INC, or World Liberty Financial Inc. And while they complain of Trump's potential conflicts of interest, other Democrats on the Senate Banking Committee are still in talks with Republicans to hash out a crypto market structure bill. Okay. So US Senator are in close negotiation on the language to set up regulated crypto markets. And while they debate the details, Senator Elizabeth Warren is seeking to continue illuminating President Donald Trump's personal crypto ties. She's good at pressuring. So the the Massachusetts lawmaker who is the ranking Democrat on the Senate Banking Committee, a frequent ally, Senator Jack Reed, sent a letter to Treasury Secretary Scott Bessent and Attorney General Pam Bondi, requesting information on reports that Trump linked World Liberty Financial Inc. sold token to North Korea, Russia, and other illicit actors. So she's going to see what is gonna be the fact such sales, highlighted by accountable.us, a non-profit group investigating Washington influence, raise serious questions about worldwide due diligence policy on procedures, including whether its token or other products enable sanction evasion, money laundering, and terrorist financing. Senator wrote. So Warren and some other Democrats in both the Senate and House of Representatives have targeted the president's business connections with WorldFi, saying they pose a significant conflict of interest and as his administration seek crypto-friendly policy that will directly benefit Trump's financial interests. And a protracted resistance from the ranking member of one of the two committees that need to pass crypto registration could normally spell doom for a legislative effort. However, the Democrats in the Senate Banking Committee or SBC have demonstrated a split over crypto efforts, with Warren maintaining her stance that the industry is over risky and the president dangerously confident while other members continue to negotiate legislative language and advocate for the market strategy. Still hope it sees a markup in that committee before the end of the year, through its uncertain whether the other panel, the Senate's Agriculture Committee, will be able to follow suit with its draft bill that still features some significant gaps. Crypto lobbyists have said in recent days that the closed door talks among senators and are unusually secretive, giving them some hope that serious language negotiation may be happening. And while many Democrats have routinely demanded that the president and other senior government officials should be explicit banned from maintaining business tied to crypto operation, Republican lawmakers have never considered that point in their legislative drafts. Okay, sum up in one line. The Senator Elizabeth Warren, she writes and paper the request to see and to do the diligence of uh, the whole file to see the relationship between President Trump and the the World Liberty Financial, seeing whether is there any connection in terms of financial in terms of money laundering and sanction evasion as well as terrorist financing. Okay, so let's see what is going to happen if Fed cuts rates before Christmas Eve. So I got this news from Cointelegraph, and this article had been written by Dilip Kumar, but it's pretty old. It's not today's news. It's on November 13. For the pre-Christmas Fed rates cut could boost spending, shift bond yields, lift risk asset, and increase demand for crypto. So for the whole article, these are the key takeaway. The first one, the Feds from December the 9th and 10th meeting carries unusual weights as the markets wait to see whether another rate cut will arrive before Christmas, right? So it shapes bonds, equities, and crypto as well. And then after two cuts in 2025, rates now it sits at between 3.75% until 4%, and labor weakness and softer inflation support further easing. But officials remain divided because inflation risks have not fully cleared, and a cooling job market, easing inflation, and the end of the quantitative tightening could also justify another reduction and align with year-end liquidity needs. So the last point that he highlights is sticky inflation gaps in economic data caused by the government shutdown and a divided Fed may pushes policymakers to keep rates unchanged this December. The U.S. Federal Reserve meets on the December 9 and 10 for these 2 days. They are gonna decide interest rates, and it will not be just another routine gathering, but the market will be watched closely and see what direction policymakers will choose. And with the Fed cut rates before holidays, right? A pre-Christmas Eve reduction, it could send waves through bond stocks, credit markets, and crypto. So this article will explain why the Fed's pre-Christmas meeting is very important, and it will outline the factors supporting or oppose the potential rate cuts. And the author, he will highlight what to watch in the upcoming weeks as well to see how a Fed move could affect crypto as well as other financial markets as well. So let's see together the background of the December rate cuts. Uh, Starting from central banks, it typically cut rates when inflation is easing, economic growth slows, or financial condition become too tight, right? In late October, the Federal Reserve lowered rates by 25 basis point, setting the federal funds target range around 3.75% until 4%, and its lowest level since 2023. Oh no, 2022 or 3 years ago. And this move followed another 25 basis point cut in September 2025, making it that the Fed second rates reduction of this year. So this move came amid clear sign of a cooling labor market. October recorded one of the worst monthly layoff total in more than 2 decades. This information is based on the multiple labor market reports, and it reinforces concerns about weakening job conditions. And the Fed's October statement echo again this trend, noting that risk to the employment has increased even as inflation remains somewhat elevated. And at the U.S. press conference, Fed Chair Jerome Powell stressed that a December cut is not a foregone conclusion, yet economists at Goldman Sachs still expect a cut, pointing to clear signs of labor market weakness. And Fed officials remain divided also, with some emphasizing inflation risk and the limited room for a further easing. And there is the possibility that they will do the rate cut in December, but it is not guaranteed. So these are the factors supporting a potential rate cut. There are several reasons that the authors say. First one is the cooling labor market. Uh, For the cooling labor market, private sector data shows softer hiring, rising layoffs, and a slight increase in employment. And second factor is the moderating inflation. It is still above target, but continue to trend lower, giving the Fed more flexibility to ease policy. And the third factor is the ending quantitative tightening. So the Fed has announced it will stop reducing the size of its balance sheet beginning December the 1st. And the fourth factor is the pre-holiday timing. A rate cut would align with year-end liquidity needs and help set expectation for 2026. So this is the infographic that Cointelegraph visualized based on the Department of Labor and FBIB, the conference board, and by New York Fed. We are right now in 25, almost 26. The dark green is the job opening as a share of the labor force. It's still at the number two, not too high, still low. And the conference board, and then continuing claim the inward here, the average in the range -1. Okay. So there will be the argument as well that the Fed will postpone the action as always. So there are some factors as well suggest that Fed may delay a rate cut in the near future. So the first reason is the sticky inflation. According to the Fed's last test statement, the inflation rate remains somewhat elevated, he said, and data vacuum. The US government shutdown has delayed key employment and inflation reports, making policy assessment more difficult. And a committee division as well as Federal Reserve officials are split on the appropriate path forward, while which encourage a more cautious approach. And there are the limited rooms for easing because after multiple cuts this year, some analysts argue that policy is already close to a neutral level. But there is some details as well. He said, "Did you know in March 2020 the Fed cut interest rates to near zero to respond to the COVID-19 crisis? It lowered rates by a total of 1.5 percentage points across its meetings on March the 3rd and March 15." Wow. So this is what to monitor before December. These factors are likely to shape the Fed's upcoming policy decision. So the first one, there will be non-farm payrolls and unemployment. So is this job market continuing to slower down? The second one, it will be the inflation data. Any unexpected rise in the inflation will reduce expectations for policy easing. And the third one is going to be financial conditions and the market signals, saying that our credit spreads widening and is overall market liquidity tightening. And there will be the Fed communications as well, because difference of the opinion within the Federal Open Market Committee or People's FOMC may influence the outcome, as well as there will be the external shock, trade developments, geopolitical risks, or sudden supply disruption could shift to Fed approach. and there will be the how to Federal Reserve cut may impact crypto. So Fed rates cuts increase the global liquidity and often push investor toward riskier asset like crypto in search of higher return, right? So Bitcoin and Ethereum tend to be benefit from a stronger risk appetite and rising institutional inflow, and lower DeFi borrowing rates also encourage more leverage and trading activity. Stablecoins may see greater use in payment. Also, their yield advantage narrow when rates fail. Mm, Makes sense. And however, if a rate cut is interpreted as a signal of a recession, crypto may experience equity like volatility. Market might see an initial boost from easier liquidity, followed by a pullback driven by broader macro concerns. And if the global financial conditions loosen instead, the environment could support further crypto demand. And there will be the lower borrowing that costs make it easier for people and institutions to take investments risk, which can draw over interest toward digital assets. And as more money flows into the sector of crypto company can build better tools and services, helping the industry connect more smoothly with the rest of the financial system. So this is the consequence. And consequences of a Fed rate cut on other financial sector. This is the look at the potential effects on the major asset class if the Fed cuts interest rate, right? There, there will be bond and yields. So short-term yields will likely decline as market adjusts their expectation. The yield curve may steepen if long-term yields remain stabler than short-term ones, which can signal confidence in future growth. If the cut is viewed as a sign of recession risk, long-term yields may fall as well, and resulting in a flattening and or even an inversion of the curve. For the US dollar and global FX, a rate cut generally weaken in the dollar because interest rate differential narrow. This often supports emerging markets and community exporting country. If the cut is driven by concern about economic growth, safe haven demand may temporarily push the dollar higher. And for the equities, a pre-Christmas Eve rate cut could spark a rally in U.S. stocks if investors see as is a sign of confidence in a soft landing. A soft landing refers to the cooling inflation alongside a stable labor market. If the cut is motivated by growth worries instead, corporate earning may come under pressure, and defensive sector could outperform clinical one. This is a very good article. Let me take note because I will summarize all of this content and make some clip again on the TikTok. Okay. Shall we start? Okay, so this is the response of the A16Z to Department of the Treasury. Um, it's just my curiosity because we were chatting about the capital, the Trump policy on cryptocurrencies, as well as the challenge on the challenge from the Senator Warren, as well as other Democrats. And I just want to read more about the perspective of the venture capital, like through this lens. How do they think about the genius? How do they react? And is there any prediction outcomes that we have to be aware in terms of crypto market, as well as any adoption or any political movements? So I got this article, this paper from Andreessen Horowitz website this morning, and it's gonna be 15, or if I remember it correctly, oh yeah, 14 pages. And I'm not sure whether we will dive together all of this, but I will try to capture the important messages from A16Z. So let's read with me, and let's see what are we gonna find out from this response from the venture capital perspective into the US government perspective. Okay, so this document has been kicked out earlier this in the beginning of November, and it was written by the A16Z. This letter addressed to the Scott Bessent, Secretary of the U.S. Department of the Treasury. Scott Bessent, how does he look like? Ah, okay. Okay, so this is the response to Treasury Advance Notice of Proposed Rulemaking, Genius Act Implementation Comment. Dear Secretary Bessent, Andres Horowitz, A16Z, appreciates the opportunity to respond to the questions in the U.S. Department of the Treasury Treasury Advance Notice of Proposed Rulemaking, the ANPRM, published on September 19 regarding implementation of the Guiding and Establishing National Innovation for U.S. Stablecoin Act, or the Genius Act, or Genius, or the Act. Okay, this is how they call it, three different ways. We appreciate Treasury's commitment to fulfill the requirements of the Genius Act, encouraging innovation in payment stablecoin, while also providing an appropriately tailored regime to protect consumers, mitigate potential illicit finance risk, and address financial stability risk. Okay, moving next to share about A16Z. It's the venture capital firm that invests in seeds, venture and late stage technology company focused on biohealthcare, consumer crypto enterprise, fintech, and games. Oh, I didn't know that they invest in games as well. So currently they have more than $74 billion in assets under management across multiple funds, with more than $7.5 billion in committed capital for the crypto funds. In crypto, we primarily invest in companies using blockchain technology to develop protocols that people will be able to build upon to launch internet businesses. Okay, so they invest in crypto and lean more in the infrastructure that allow people to build on it. Our funds typically have a 10-year time horizon as we take a long-term view of our investment, and we do not speculate in short-term crypto assets price fluctuations. This is a very nice one. So 1 decade building. Okay, and let's take a look a little bit about the Genius Act that they write. So the act is a momentous step in advancing the future of digital finance and integrating blockchain systems into traditional markets. We believe that the act will foster responsible innovation. We, as in A16Z. So apart from that, it will be an important step in unlocking the benefits of blockchain technology. We agree with Treasury that it will strengthen the US dollar's reserve currency status and bolster US national security while prioritizing consumer protection. This is what they think. At the same time, clarity from regulators regarding what entities are covered, the requirement applicable to them, and the consequences of non-compliance are essential to Genius delivering on its promise. Okay, so the regulation has been covered. In this regard, we are concerned, okay, that the ANPRM may inadvertently create confusions by asking comment on topics that appear to be the provenance of other regulator, such as the primary federal payment stablecoin regulator with respect to those area, some of which we flag in specific comments below. There appear to be potential for overlap and inconsistency. It would be helpful to understand how Treasury envision the ANPRM process, linking to the rulemaking and that other regulators are required to undertake. Oh, okay, I understand that uh, the A16Z, they prefer to understand the vision and the process of ANPRM first. After that, they can comment because there will be the other process pop up as well. So this is the stablecoin payment process that they request to understand more. So with this, with these fundamental considerations in mind, uh, we have forecasted our comment observations and suggestions as well in these bullets. In section 3, we discuss the importance of clarifying core concept under the Genius Act and respond to the question 1, 3, 4, 8, 9, 10, 12, and 20. Oh, but I need it. I just want to see the whole Genius or the whole stablecoin payment. aka NPRM is the section that they are referring to. Oh, okay. So this is the methodology that they are digesting, discussing, and giving the comment. And okay, so to clarify the core concepts, the ANPRM, it requires comments on numerous terms defined in the Genius Act. Clarifying the concepts as below is essential not only for entities directly regulated by Genius, but also for users of crypto, of payment stablecoins, technology investors, and innovators that developing the core technology functions that facilitate decentralized blockchain system. And clarity for this term is critical in that it will determine the scope, important regulatory categories, establish the act, cover activity, and set consequences for non-compliance. Okay. So they request for the clarity because the concept of the payment stablecoin, it will reflect to other parties as well, and we need to scope the regulations for other parties as in investors, innovators, companies. and person payment stablecoins and non-payment stablecoin. So at the outset, it is critical to recognize that not all stablecoin used for payment are payment stablecoin. Hang on, I'm confused. Not it is critical to recognize that not all stablecoin used for payment are payment stablecoin. The act itself recognizes the variety and potential complexity of non-payment stablecoin, specifically calling on Treasury to conduct a study of non-payment stablecoin in consultation with the federal banking agencies and market regulators, and provide a report to the Senate Committee on Banking, Housing, and Urban Affairs and the House Committee on Financial Services. It would be contrary to clear congressional intent in requiring such a study for regulators to group non-payment stablecoins alongside payment stablecoin for purpose of the regulatory framework established by Genius. Oh, okay. So there are two types of payment: the non-stable coin and stable coin. And for the payment stable coins, according to the Genius Act, uh, stable coins that are fiat backed and issued by a centralized stable coin issuer that holds fiat backed reserve assets to maintain the value of the coin against pegged asset as the primary focus of the regulatory framework established by Genius. Decentralized stablecoin are an important and popular type of stablecoin that do not fit within the payment stablecoin categorization. Decentralized stablecoin are generally backed by digital assets like ETH, the network token of the Ethereum blockchain, and so the network token of the Solana blockchain, and issued autonomously by decentralized smart contract protocol that utilize mathematical algorithm and other mechanism to maintain the collateral and the stability of the stable coin. Oh, okay. So by the payment stablecoin engineers, they categorize the fiat based reserve asset as the payment stablecoin, whether it's the uh, Ethereum or Solana network. So the technical underpinnings of decentralized stable coins mean that they are not issued by any person, and because yes it is issued by the smart contract and are entirely disintermediate, providing user with significant benefits. First, because decentralized stablecoin typically rely on collateral that exists natively on blockchain. They are generally fee free from off-chain risk, such as those that rise from custodying asset with third party like banks. And second, decentralization has the innate benefit of providing, of preventing centralized parties from controlling or manipulating the parameters governing these stablecoins, which can increase trust and eliminate risk inherent to the existence of controlling party. Okay, so all these payment stablecoin that they categorize as in based on the smart contract, Ethereum, or Solana, that is not issued by the person, right? It is issued by the smart contract, and it's not gonna be in the concern because there will be the third party involved like banks. So the X threshold definitions and core prohibition, including both the definitions of person and payment stablecoin, excludes decentralized stablecoins from its scope. Any proposed rulemaking should consistently and clearly reinforce this exclusion. So, coming back to the person, uh, the person in the section 3 bracket A of the act prohibits any person other than a permitted payment stablecoin issuer from issuing a payment stablecoin in the United States. So this person is an individual, partnership, company, corporation, association, trust, estate, cooperative organization, or other business entity, incorporated or unincorporated. No individual, organized group, or other entity that resembles those in section 2 bracket 24 controls the process of issuing a decentralized stablecoin. Rather, decentralized stablecoin are issued through the automatic and programmatic operations of smart contract that are not controlled by any person, nor are these person nor are there persons that give rise to the type of off-chain counterparty risk that exists with other stablecoins, such as those that arise from control over reserve asset. Even where humans do participate to some extent in governance of a protocol, outcome relating to the stablecoin are not determined through a centralized decision-making process like those present in the traditional business entities described in section 2 bracket 24. Protocol governance is generally limited to discrete issues like collateral types and liquidation ratio, rather than issue of the token or control over the supply or underlying collateral. Accordingly, Treasury should make clear that since decentralized stablecoin are not issued by a person within the meaning of the act, they are not covered by the prohibition in section 3 bracket A. I am not quietly clear for this. The act only prohibits person from issuing payment stablecoin. Okay. Uh, and by person it includes individual and an organized entity. And decentralized stablecoin are not issued by any person. Okay, it must be issued by smart contracts and no centralized control or off-chain counterparty risk. Human governance is minimal and not related to issuance. Okay. Conclusion: Treasury should clarify the decentralized stablecoin are exempt. Oh, okay. It's pretty uh, descriptive. Okay. Um, Moving next to the payment stablecoin. I define payment stablecoins as a digital asset that is or designed to be used as a mean of payment or settlement, and it is obligated to convert, redeem, or repurchase from a fixed amount of monetary value, not including a digital asset denominated in a fixed amount of monetary value, and represent that such issuer will maintain or create the reasonable expectation that it will maintain a stable value relative to the value of a fixed amount of monetary value. Okay, as noted above, decentralized stablecoin do not have an issuer. No person control the issuance of such stablecoin. Rather, they are issued by autonomous software that is not controlled by anyone. In addition, the definition of payment stablecoin pertain to a digital asset, the issuer of which has certain redemption obligations and make certain representations regarding stable value. But because decentralized stablecoin do not have issuer, there is no person with redemption obligation or who could make such representation in the first place. Rather, user tend to redeem collateral. User initiate and control interaction with autonomous software, and any representations about the ability of the asset are solely dependent on the functioning of the code. This autonomous functioning is made possible due to the use of on-chain asset as collateral, which means collateral can be stored and redeemed without intermediaries. For the foregoing reason, decentralized stablecoin do not fall within the definition of payment stablecoin. Oh, okay. Can I just put this in ChatGPT again and share it with you guys? So far that I understand is like the definition is the contrast version of the decentralized stablecoin at the moment. Oh, okay. So payment stablecoin, it requires you issuer, and decentralized stablecoins have no issuer. It's the smart contract. No redemption obligation by a person. Stability depends on the code, not an issuer promises. So conclusion, because decentralized stablecoin lack an issuer and the legal definition hinges on the action and obligation of an issuer, they do not meet the act definition of payment stablecoin. Oh, okay, I get it now. So this decentralized stablecoin is not under the definition of payment stablecoin. Okay. LUSD is the example that should not be categorized as the payment stablecoin. It is issued by the liquidity smart contract protocol. No person or entity controls. So user who wants to generate LUSD, they can just deposit ETH into liquidity protocol. It's the non-custodial smart contract, as collateral and get LUSD in return. So the deposit asset must be in the value of LUSD. So the smart contract hold the collateral in escrow until the user returns the borrowed LUSD. So each user has the complete control over when to withdraw their deposited collateral, unless the value of the collateral falls below a required minimum. And at this point, it is liquidated to the automated mechanism. So the entire system functions transparently in accordance with its rule. Any market joiner can access the benefit and risk of the system without the fear of mismanagement or the rule that being changed. So the absence of centralized party that would otherwise give rise to the third party risk, as well as the over collateralization requirements and liquidation ratio, makes LUSD a low risk decentralized stablecoin, which is reflected in historical stable price. Okay. Given the scope of the person and payment stablecoin, definition decentralized stablecoin do not fall within the Genius framework. Okay, so this is the bottom line that decentralized stablecoin do not fall within the Genius framework because Genius cover payment stablecoin, but the decentralized stablecoin it should not discourage regulated entity from interacting with and genuinely decentralized stablecoin mitigate many of the risks that Genius seeks to address. So the implementation stage of Genius Treasury should confirm not only the decentralized stablecoin fall outside of the act, but also has the no prohibition against regulated entity interacting with them under Genius. So far, decentralized stablecoin has been operating by the smart contract and stay above of the Genius Act, and also by itself. The decentralized stablecoin cover all the risks that Genius tries to close the gap. Okay, a good one to know. Okay, so to provide clarity regarding what stablecoin fall, the payment stablecoin category, it will be important that Treasury clarify what constitutes a decentralized stablecoin. A key factor to determine whether stablecoin is decentralized is whether there is a person or group of persons acting in concert who can exercise control over its smart contract, right? And then issue the mechanism, collateral, or other feature that has material effect on the stablecoin's value. And the absence of the control over each of these features mitigates certain risks that Genius aim to address. For example, no person has unilateral control over stablecoin smart contract. Users are not exposed to risks stemming from manual performance of the operation. and potential they are not gonna face unintended change to the system or other similar risk. So on the contrary, if a person has the control over smart contract, this issue, uh, the act may apply. Likewise, if a person control collateral, user is having collateral stolen or otherwise mismanaged or misused. So they give the example many strategy backed synthetic dollars or stablecoin where the individuals often actively manage and control the collateral to generate a return for stablecoin issuer are not decentralized given the presence of unilateral control. That's correct. So the most important thing that A16Z is back is Treasury should take a holistic view to in determining whether control is present. A contract can be programmed to autonomously issue stablecoin, but that does not necessarily make the stablecoin decentralized, as it enable person to control critical components of the stablecoin, such as the liquidation mechanism or collateral. So in some stablecoin that are not controlled have no issuer and do not exhibit many of the risks that Genius seeks to address, and therefore should not be subject to the prohibition in the section 3. Okay, so the key idea that we have been reading so far, A16Z encourage Treasury to define the stablecoin, payment stablecoin and decentralized stablecoin. And the second point is A16Z, they share their comments that although decentralized stablecoin, it can be operated based on the smart contract. We don't need any person as in individual or corporate or a group of entity to run. So there is no risk, and the decentralized stablecoin itself, it can be secure at some level, not all. So this is the part where they can self-secure instead of having the genius to close the gap. And so far they suggest that Treasury could look to control-based decentralized framework set forth in the Digital Asset Market Clarity Act, Clarity Act, which provides solution to determine what in practice constitutes a decentralized stablecoin. Clarity can leverage the control-based decentralization framework to provide carve-out for decentralized finance messaging system and a decentralized finance trading protocol. This does not involve an intermediary in a position to exert unilateral control or cause user harm. For example, the definition of decentralized finance messaging system excludes system that provide any person other than the user with control over the funds of the user or execute of the transaction of the user. So clarity, practical and reliable framework can use for determining the control has been eliminated with respect to stablecoin. So it can help determine whether stablecoin is decentralized And lastly, they suggest that Treasury could work with the SEC or CFTC as part of its study on non-payment stablecoin. Okay, to establish a taxonomy and framework, okay, and encourage as well ว่าให้ไปอ่านมาใหม่ไปศึกษามาใหม่ for classifying stablecoin that are not classified as the payment stablecoin from the regulatory perspective to determine when stablecoin function more like security, derivative, or community. So clarity regarding what alternative regulatory framework beyond Genius, if any, apply to such stablecoin could provide additional confidence to regulate entity that seek interact with them. Okay, in addition to confirming the act inapplicable to the decentralized stablecoin, Treasury should address critical ambiguity, the meaning of payment stablecoin. And a payment stablecoin is described as a digital asset. Among other elements, is designed to be used as means of payment and settlement. So this element invites arbitrarily subjective interpretation that could chill experimentation and innovation with digital assets because it's unclear, right? So being for a use is based on the subjective intent of the creator of the digital asset and the asset objective design characteristic. So the definition should not specify what level or manner of use is required to establish this digital asset. It is used as a means of payment or settlement. And conversely, this criterion leaves open the possibility that sufficiently many stablecoin holders might begin to use the stablecoin for other purposes, such as digital asset could later fall outside of the Act definition. So the Act definition of payment stablecoin can be misconstrued in the manner that raises uncertainty as to whether it encompasses arcade token, a category of digital asset that function currency within contained digital ecosystem. For example, airline miles, credit card, reward points, or digital gold in a video game. So they are intended primarily to facilitate user interaction, access to the feature, redemption of products or services rather than serves as the general purpose of the payment. So by the design, arcade tokens are limited in the often do not represent a fixed amount of monetary value. So for this reason, arcade tokens do not meet the definition of a payment stablecoin, right? So however, issuer of the arcade token can control the supply to dampen price increase. Similarly to airline, keeping the value of airline miles relatively stable over periods of time and sometimes offer redemption rights. And as a result, the Act broad definition of payment stablecoin can create confusions as well regarding to the permissibility of arcade token the fact that loyalty and rewards point like airline miles are issued in tokenized form, and it's going to be on the blockchain. That does not mean they should be classified as the payment stablecoin, such as asset do not require reserve, and the expectation of consumer are fundamentally different as compared to stablecoin. So arcade tokens can also do not pose the consumer protection, liquidity, or systemic risk that Genius was intended to address, rather than they enable activity within this grid self-contained network that utilize their own digital currency. So from all of the example that A16Z plays and share with Treasury, Treasury should qualify the arcade tokens fall outside the scope. So it's gonna be coming back to the definition of the payment stablecoin again. So okay, and must be some question that Treasury posed to the A16Z, and this is the answers that they provide on the digital service provider. So by this word, the definition together with its exclusion reflect clear congressional intent to carve out various participants in decentralized network and their underlying software, including the distributed ledger protocol, validator, developer of non-custodial software interfaces, and other. But the breadth of the definition and its exclusion, as well as the potential ambiguous term therein, create uncertainty as how the statute would apply in practice, and could lead regulator to broaden the scope of the act. In a certain instance, it could also be difficult for the market participant to discern the regulatory obligation. So to that end, we recommend that Treasury clearly clarify the regulatory status of particular participant and providers in the blockchain ecosystem to ensure that Genius implementation align with the underlying policy objective. Again, so they encourage to brush up the definition of Clarity Act, and then we can work after that. So Treasury could look again to the Clarity Act, and this act provide clear exemptions for decentralized finance activity that are not subject to the regulatory framework that the legislation otherwise establishes for intermediaries in the digital asset transaction. So Genius established prohibition on certain intermediaries and carves out this intermediate software from such prohibitions. As a result, the exemption in Clarity are useful guideposts for congressional intent. With the passing of Genius, conveniently, these exemptions are generally consistent with the high-level Genius, high-level categories provided in Genius, but provide greater granular detail. So they could be tailored in the Genius as well, including this is the thing that they need to do: compiling network transaction relaying, searching, sequencing, validating, and acting in a similar capacity, and providing computational work operating a node or Oracle services, or procuring, offering, or utilizing network bandwidth or other similar incidental services, and providing the user interface that enable user to read and access the data about the blockchain system. And fourth, it's the develop, publish, constitute, administer, maintain, and distribute a blockchain system. And also the last one is the develop, publish, constitute, administer, maintaining, or otherwise distribute software or system that create or deploy hardware or software, including wallets or other system, facilitating an individual user's own personal ability to keep, safeguard, or custody the user's digital assets or related private key. So this is the area that they suggest Treasury delist it in the Genius as well, lady. Okay, still having some suggestion. Moving on. Moving on. Moving on to the compensation and profit. So all these they engage in the business. So the element that the SAP define, it must be construct to the mean that the SAP handle control over digital asset, and there must be some sort of customer or other counterparty for DSP in connection. And this scope would help ensure the core technology function that are not regulated in the financial activity. So digital asset regulation must distinguish between infrastructure and software function, and opposed to business that engage as the intermediaries in a traditional financial activity. Actors who do not perform intermediary financial role, it should not be regulated because they were providing financial services or participating in transaction of regulated financial instrument. And the harm of failing to draw this crucial distinction are significant and at odds with the aim of the act. And it is important as well to clarify the SAP exclusion. The SAP, because of the definition, quoting that to make available for purchase. If read expansively, this term could unintentionally scope in entity and software that were never meant to be regulated under Genius Act, including not only blockchain system participant and non-custodial wallet provider, but even web browser or internet service provider. So they suggest a regulator could interpret the ambiguity in offer to expand its jurisdiction and broaden the statute application beyond its organized original intent, um, to redefine and provide additional clarity on the SAP definition. This thing can preserve the distinct boundary and maintain internal coherence and mitigate the risk that a wide array of infrastructure and software could otherwise fall within the scope of the act. So to illustrate this qualification, Treasury could confirm that listing a stablecoin on an automated market maker displaying a token platform or enable swap function through non-custodial infrastructure does not qualify as an offer. So congressional intent of capturing financial transaction that actually it involve intermediation, solicitation, or control rather than activity that do not. Okay, I get it. So the summarization is the activity that they need, that Treasury need to clarify that this process, this activity, this transaction, as the how which word should I use? Defined as the action that needs the control, or it's the action that do not need control. Let's jump into the conclusion. Are we on tax? Oh, okay, this is interesting. So there's the consequences of non-compliant as well. So what is going to happen if we have non-compliance, right? The scope and the interaction of the penalty will be benefited from the clarification. So in particular, we clarify which entity defined under the Act and subject to each of the Act penalty provision, and whether these provisions are meant to imply additional compliance or not. For example, they share that the Act provides the unlawful for any person other than a PPSI to issue a payment stablecoin in the United States. So it is unlawful for the ASP to offer or sell a payment stablecoin. And then the another section say whoever knowingly participate in a violation of section 3 is supposed to be imprisoned. Taken together, the section 3 it could appear to impose an extra layer for penalty, and it also be deemed as participating in a violation of section. So it's unclear as well in the section 4 prohibiting on marketing a conduct in the United States as a payment stablecoin unless it is issued pursuant to Genius is intended as a separated violation from those above, and whether it's supposed to apply more broadly to anyone. So the civil money penalty provision in section refer to the issuance of stablecoin in violation of section 3. So the tax provision appear to only cover payment stablecoin issuer and their institutional affiliate party. So nevertheless, it given the chief scope of penalty provision throughout the Act, it would be beneficial to confirm that the CMP provision are limited to payments, stablecoin issuer and their IAP, and are not necessarily applicable to the SAP. So far, I have no context what was the the section that they were referencing about, but summarize it in non-lawful language. I think it's because they have the set of action, and these action have the gap where it can tie it can tie someone else guilty because of this. So they encourage as well again to share that the treasury needs to see these condition carefully. Oh, this is interesting. The last part, delivering on the promise of genius. Uh, so by providing a clear regulatory framework for growth and responsible innovation in the stablecoin market, um, Genius has the potential to spur consumer payment innovation, um, boost venture investment into the stablecoin market, and ensure the US dollar's global reserve currency. Given the inherent efficiency and speed of blockchains, increased adoption of payment stablecoins under Genius should significantly reduce transaction fee, speed up settlement time, and lower failure rates compared to existing payment system. Regulatory certainty under Genius will also encourage venture investment into the stablecoin market and help attract talent into the stablecoin related startup. Importantly, Genius will help ensure the US dollar global reserve currency status by driving demand for treasury as payment stablecoin reserve. So onerous or unworkable implement regulation, however, could seriously undermine this potential benefit with consumer, the stablecoin market, and US interests appropriately tailor implementation of Genius can discuss above is thus critical to realizing the act full promise and they end the closing that we greatly appreciate the opportunity to provide comments on this important matter, and we look forward to continue engage with Treasury on these issues. Respectfully submitted, my Channing, Head of Policy and General Counsel, A16Z, Michael R. Corriver, Head of Regulatory, A16Z, Jai Ramaswamy, Chief Legal Officer, A16Z, and Scott Walker, Chief Compliance Officer, A16Z. Wow, it's a beautiful ending. Can I have a look? How does he look like? Oh, stunning. Mm, okay. A16Z team members C-suite. Okay, this is how they look. Okay, here we go. We finished the I jumped from 7-8 to the conclusion. I'm thinking how to summarize in short lines. So the comments is like Treasury need to clarify the definition of payment stablecoin and decentralized payment stablecoin, and some of the operation doesn't need the stablecoin, doesn't need the stablecoin regulation. So it's better to it's better to clarify it carefully. And the last one, the last ending is A16Z is very happy to comment, and they are looking forward to join them again in the next processes. Okay, so to sum up, to share again with you guys, we are having the streaming. Oh no, the trading campaign. So this one has just launched last last week, and we are having 3 weeks left to deposit and get 20% bonus as the plus the extra rewards. So the activity we transfer to the future accounts, and then we will get up to 200 USDT bonus, and then after that we trade more to earn up to 200 USDT, and then after that we will get extra reward. So during the week, every week we will get the reward every Mondays, every Wednesday, today, and every Friday. And the end of the campaign, it will be on 13 December, and at 2 p.m. UTC plus 8. Don't forget to register, because the campaign is tailored specifically the KOC and that community, and only register are eligible to participate. And this is the link that I can drop to you guys again. I'm thinking to share you some news before we go. So this was the original content that I am going to share, because we were talking earlier about the regulation, right? So this is the idea of the regulation framework that I would like to talk about it as well. So this new, I have got it. It's in the opinion section from Cointelegraph, from Akata Ferreira, and it was out in the November the 9th. She say regulators must catch up to the new privacy paradigm. Uh, okay, so the zero knowledge proofs replace shared observation with shared verification. It also enables the accountability without revealing the sensitive information. So the regulators must embrace privacy as a infrastructure. Oh, this is a nice keyword. Uh, to to talk about it deeper, so that there will be the new consensus across Web3. For years, privacy was treated as the compliance problem, right? Because it's the liability for developer and at-best and niche concern. Now it's becoming a clear that privacy is actually what digital freedom is built on. And Ethereum Foundation announcement of the privacy cluster, it's the cross-team effort focused on the private rates and right, is the confidential entity as the zero knowledge proof. It's the sign of a philosophical redemption of what trust, consensus, and truth mean in the digital age, and a more profound realization that privacy must be built into infrastructure. So this is the key idea. And regulator should also take a closer look. Privacy preserving designs are no longer just experimental. They are now the standard approach. They are becoming the way forward for decentralized system. And the question is whether law and regulation would adopt this chip or remain stuck in the old school logic that equates visibility with safety, and from share observation to share verification. This is a long time that digital governance has built on a logic of visibility, and system were trustworthy because they could observe by regulator, auditor, and public, right? So this shared observation model is behind everything from financial reporting to blockchain explorer, and transparency was the means of ensuring integrity. So the cryptographic system, however, its more powerful paradigm is emerging. Share verification instead of every actor seeing everything. Zero knowledge proofs and privacy preserving design, able verifying that error was followed without revealing the underlying data. So truth becomes something you can prove and something you must expose. So this shift might seem technical, but it has profound consequence that it means we no longer need to pick between privacy and accountability. Both can coexist embedded directly into the system that we rely on, and regulators too must adapt to this logic rather than battle against it. So how is it privacy as infrastructure? So the industry is realizing that the same thing, right? privacy is not a niche, it's the infrastructure. So without it, the Web3 openness become its weakness and transparency collapse into the surveillance. um, Emerging architectures across the ecosystem, it demonstrates as well that the privacy are and modularity are finally converging. So Ethereum privacy cluster focus on the confidential computations and selective disclosure at the smart contract level. So others are going to deeper integrating privacy into the network consensus itself, center on linkable messaging, validator anonymity, private proof of stakes, and help self-healing data persistent. These designers are rebuilding the digital stack from the ground up, aligning privacy and verifiability and decentralization as mutually reinforcing properties. So this is not an incrementational. This is not an incremental improvement. It is a new way of thinking about freedom in the digital network age. And yeah, this is the area that they says as well. Policy is lagging behind the technology. So um, current regulatory approach reflect the logic of share observation, like everyone keep monitoring the system together, but privacy preserving technology are scrutinized and restricted, while visibility is mistaken for safety and compliance. Developer of privacy protocol face regulatory pressure, and policymakers continue to think that encryption is equal to observability. And this perspective is outdated and dangerous because in a world where everyone is being watched and where data is harvested on an unprecedented scale, bots so leak and exploit the absence of privacy is the actual systemic risk. It's the it undermines trust, puts people at risk, and make makes democracy weaker. By contrast, privacy preserves design, make integrity provable, and enable accountability without exposure. So lawmakers must begin to view privacy as an ally, not an adversary. It's a tool for reinforcing fundamental rights and restore confidence in digital environments. So this is the idea that they gave. And moving moving on to the the architecture of freedom. The Ethereum Foundation's privacy initiative and other new privacy first work network design share the idea that freedom in the digital age is the architectural principle, so it cannot depend solely on premise of good governance or oversight. It must be built protocol that shapes our life. And this new system, private roll-ups or state-separated architecture and the sovereign zone, represent the practical synthesis of privacy and modularity. They enable community to build independently while remaining verifiably connected, thereby combining autonomy and accountability. So policymakers should view this as an opportunity to support the direct embedding of the fundamental right into the technical foundation of the internet. Privacy by design should be embraced as the legality by design. a way to enforce fundamental rights through code, not just through constitution, charter, and conversions. The blockchain industry is redefining what consensus and truth mean, replacing shared observation that visibility with verifiability and swollen with sovereignty. And as this new down for privacy take shape, regulator face a choice, limit the under or framework of control and support its the foundation of digital freedom and more resilient digital orders as well. So the tech is getting ready and now need to catch up as well. So this is what they share. Thank you for the watching, guys. If you are looking for the content to learn, just click like, subscribe, or comment the detail for me to study, and I can share with you in the next live. And Grace Talks Web3 Live, it will be the 3 hours for recently to share the news, the crypto market overview, as well as things that we can learn together. The idea of the channel, it will be the agenda that I will pick and I will share to keep you informed, prepare, and stay ahead of the market. So have a good day. See you again tomorrow and have a nice day after this. Goodbye.